right, well, I mentioned earlier we have a busy week on tap between those Fed minutes and, of course, economic data. And joining me now with more is Patrick Mueller. He's the president of Bella Advisors. Patrick, it's great to have you on the show this morning. And as we prepare to kick off trade in this holiday shortened week, what's on your radar?
Yeah, that's a great question, and great to be with you, Kristen. And you know, with this year, with eggs being such a big deal, with inflation, we have the CPI report that just came out recently, and it's crazy. Eggs have been up 53%, and who would think that that would be such a big driver when it comes to our inflation rate? And with Gainesville, I'm in Atlanta, Georgia here, and Gainesville, Georgia is a little bit north of here, which is the poultry capital of the world, just so you know. And so it's crazy to think how much of a driver this has really been in our markets and in our economy. And here locally with egg prices, people just need to shop around a little bit because one local store is like over $11 for a dozen. And then you've got another store like Costco, which is $4 a dozen. So everybody just needs to shop around a little bit. But you know, taking away the egg-demic and the eggflation, you know, it's not going to be as big of a deal this year as I think most people are going to make it out to be.
So we do see signs pointing to a strong economy. I think the retail sales data that we got at the end of last week was a curveball, we could say, amid all this. But you alluded to weather there, certainly the flu season, wildfires. How have these all factored in to some of the data that we've seen at the start of the year? And is that a one-off, or are these trends that could persist?
Yeah, I don't necessarily think that those are going to be trends that are going to persist. I think especially like the wildfires, and you had the storm system that came through North Carolina. I don't think we're going to see it repeating and being a constant thing. So when it comes to natural disasters, I mean, who can really predict natural disasters? It does seem to be getting more common, but I wouldn't be that as a predictor of the future moving forward with the economy.
So with those Fed meeting minutes that are due out this week on Wednesday, Patrick, what do you anticipate that we'll hear? What do you think the market needs to hear from these minutes?
I think it's going to be more of the same. I think they're really going to stand their ground from late last year when they said they're going to start slowing on interest rates. So I wouldn't bet on them lowering interest rates until earliest summertime. But we could probably see a couple of rate drops, and it's been nice to see the Treasury surge. That's good for our clients, which are retirees and savers. So it's nice to see the Treasury a little bit higher and getting good yields on money markets. But I would bet that that's going to be a slow roll, and I would bet that we don't see the Treasury dropping below 4% this year. So I would expect that the market is going to forecast what the Fed has been saying since the end of last year.
Now, in terms of where we go from here with inflation, we've seen the tariff plan continue to come to fruition by President Donald Trump. And there are some concerns that tariffs could cause inflation, perhaps offset by some of the government cutting that we see in Washington, namely through DOGE. What is your projection for inflation going forward?
I think inflation going forward, I think it's going to start coming down, but it's going to take a little while to do that. The U.S. is like a big battleship, right, moving, and it takes a while to start turning that ship around. But I think with the pro-energy moves that this administration is going to make and bringing energy costs down overall, that's really going to bring the prices down on everything. And as far as the tariffs go, I think that it's a good move because it's just a reciprocal tariff, where we're just charging other companies what they're currently charging us to make things fair. So I don't think that we're going to see that impact. I think we're going to see the opposite of that, where these countries are going to smarten up and they're going to start dropping what they're charging us on their tariffs when we're trying to sell goods to their countries. So I think overall it's going to be a good thing. And Trump's a pretty good negotiator. If his first term, if that has any conjunction of what's going to happen in this next term, like him or hate him, he gets a lot of stuff done. And I think that we're going to see a lot of pro moves moving forward, and it's going to drive the overall cost down, which I think is going to be great long term for everybody. We just have to be patient.
To that end, Patrick, what does that mean for stocks and corporate earnings?
Yeah, we project corporate earnings to do really well this year. I don't think it's going to be quite as big of a tear as we've seen the last couple of years. I mean, we've had a couple of 25+% year returns in the S&P, and so I think that will slow down a little bit this year. But I think we're going to see tech leading the pack with AI. I think that's going to be a big driver for this year. So we like your tech companies and the Magnificent Seven. You can pretty much count on a lot of those companies, I think, to do well this year. So we like the tech sector. I like financials with the rate staying stable. I think it's going to be good for banks. It's going to be good for IPOs, as I think we're going to start seeing loosened regulations on that stuff. And so we haven't seen a lot of IPOs in the last few years. So I think we're going to start seeing more of that. And then a big one, I think, is going to be energy. And it's energy with all of these big data centers. Like Atlanta is a big hub for tech, and we're seeing all these huge data centers popping up everywhere, and they need the energy. And I think that would be a really good thing for people to focus on. So it's going to be something that might be a little bit more stable for people moving forward than the things that are really causing havoc in the markets when it comes to, like you said, wildfires and egg prices and things like that.
Patrick, how does a potential peace deal in Europe with Russia, Europe, including obviously Ukraine, impact the markets?
Well, I think that's going to be positive for everybody, right? It's going to open up production in a lot of those countries like Ukraine, and when it comes to wars ending, I mean that's going to be good for everybody, all around the world. So it's not going to be good for, I think, a lot of people in certain industries. I would be saying, staying away from defense companies and things of that nature. But other than that, I think it's going to be a really great move. I mean, for everybody. I mean, it's always good to end wars, for sure.
Patrick Mueller, president of Bella Advisors. Patrick, thanks so much for joining.
Thank you.